Despite record job loss this year and a struggling economy, the New York Stock Exchange is booming. Today, I'm joined by David Joy, the Chief Market Strategist at Ameriprise Financial, and he's here to talk about the discrepancies really between these two. Thank you so much for speaking with me today, by the way, David.
My pleasure.
Let's start off with the basics here. What is the difference between the stock market and the economy?
Well, the stock market represents a very small subset of the entire business landscape in the U.S. economy, at least in terms of the number of businesses that it represents. It's really only less than 1%. They happen to be very large companies and companies that employ a lot of individuals, but it doesn't include some estimated 30 million small businesses around the country, nor does it include the public sector, which is an important component of the U.S. economy. So while it represents a very important component, it's not the entire economy by any means.
And David, I want to ask you then, why is the stock market doing so well right now? And how is that possible if Main Street isn't doing as well?
Well, first of all, the stock market has been a major beneficiary of the stimulus that Washington has applied, both monetary policy stimulus and fiscal stimulus. That helps publicly traded companies directly. Oftentimes, that doesn't find its way down to Main Street. Certainly, some of the components of the CARES Act has helped Main Street, but not necessarily to the same extent that it helps Wall Street in all circumstances. The other thing that's important to note is that the U.S. economy, while it was very sluggish in the second quarter, has really rebounded quite strongly in the third. And that's being reflected in higher share prices. Investors are optimistic that the economy is under repair and that repair is likely to continue.
I want to delve into that just a little bit further. This is perfect segue for my next question, because does the stock market strength right now suggest any optimism for the future?
Yes, it does. I think you can think of the stock market, at least to a certain extent, as a barometer of confidence in the economy. And it is estimated that share prices sort of reflect expectations maybe 6 to 9 months ahead. And to that extent, with the stock market doing quite well, it does suggest that investors are optimistic that the economic recovery can be sustainable. Now, we'd all like to see another stimulus package coming from Washington to make sure that it gains the necessary traction to sustain the recovery, and that the necessary support finds its way to those parts of the economy that don't necessarily participate in a rising stock market. But overall, yes, it is a sign that investors are optimistic that things are on the mend.
It is really good news for, I know, so many Americans right now that need a bit of good news. Thank you, David, so much for your insight today. I appreciate it.
My pleasure. Thank you.
I'm Katie Johnston for CBS Local News.